everyone, good afternoon. You're watching the newsroom on ET Now. I'm Mubina Kapasi. Let's take a look at what the markets are up to this afternoon on the brand new week. Well, we are largely range bound for the most part of the trading session, but just in the last couple of minutes, we've seen a sharp drop come by in the equity market. So we are in fact at the day's low point. 11,430 is where the Nifty is, and the Sensex is at 38,640. So it's quite a rapid decline being witnessed, from the point of 11,500 to now 11,425, almost an 80-point drop being witnessed in the last couple of minutes. Let's tell you what are the big movers and shakers today in trade. Well, most of the stocks that were gaining now seem to have reversed course, and Adani Green included. This stock was in fact gaining a good 2% in trade earlier, but now is in the red. However, the news flow around this one was Vanguard buying 1.3 crore shares in the counter at about 667 odd rupees per share. And this is something that did cause quite a price movement in Adani Green, which ways has been seeing quite a rally. In fact, I think it's the first Adani Group company to have crossed a milestone market capitalization of 1 trillion rupees or 1 lakh crore rupees. So watch out for an Adani Green. It certainly is the cynosure of all eyes, and a lot of momentum being witnessed here. Moving on, let's take a look at the share price of SL Propack, another stock in news that is seeing a lot of momentum. The news flow around this one, of course, is with respect to the big bulk deal that took place on Friday's trading session. We are talking about, of course, the company's key investor, and that's Blackstone Epsilon, that is looking to sort of offload shares. Epsilon Bidco, that was looking to offload shares, and it did so by a series of block deals. So it sold around 1.8 crore shares, and then there were several buyers. So we had Aditya Birla, Sun Life Mutual Fund, Axis MF, Franklin Templeton, Norges Bank, etc. that were all buyers. And this essentially is something that saw the stock, by the way, plummet on Friday's trading session by 5 to 6%. But today, it's attempting to recuperate from that point. SL Propack, in fact, let's just take a quick chart check, and it's at 257 rupees. So very minor gains of only around 2%. Birla Corporation, this is a stock as well in news, and this after the High Court, Calcutta High Court has actually banned Harsh Vardhan from the group companies. Harshvardhan Lodha, he's going to be removed as the chairman of the group's flagship companies, including Birla Corporation, and he's also going to be removed as from the position of directors that he did occupy in the other MP Birla companies, including Vindhya Telelinks, which by the way is as well listed, Birla Cables and Universal Cables. Birla Corporation at this point of time seeing the full impact of this action from the High Court. Let's move on and talk about the media space, and within the pack, it's Sun TV. This morning, we had a CLSA that's actually gotten quite an optimistic view on the entire media pack. Their top pick is Zee Entertainment because of compelling valuation, but they are reiterating their buy on not just the Sun TV, which by the way is rallying in trade, but even Dish, Jagran and DB Corp. They're saying that these media companies are resilient, they have net cash in their balance sheets, and the entire space is seeing a rapid recovery, especially in advertisement revenues post-COVID-19. All right, and our last stock for today that we'd like to flag off on this segment is got to be HCL Tech. The entire technology pack has been abuzz, and this time around there is news that's keeping HCL Tech very, very upbeat. It's announced its intent to acquire publicly listed Australian IT company DWS. It's, by the way, got a $168 million FY20 revenue figure. In fact, let's go across to my colleague Poonam Sani for more details on this acquisition. Poonam, why is HCL Tech buzzing on the back of this news?
Well, after the upward revision in revenue and EBIT margin guidance, HCL Tech has come up with yet another important development. They have gone ahead and announced the acquisition to acquire DWS, which is an Australian IT solutions company. It will definitely help strengthen HCL Tech's presence in key industries, as well as its presence in New Zealand and Australia. In fact, if you look at DWS, it provides wide range of IT services, including digital transformation. It provides digital transformation, IT, business and management consulting services, data and business analytics, robotic process automation, and also if you look at the FY20 revenue, it stood at 168 Australian dollars, which is close to around $122 million. It employs nearly around 772 employees. To know that the entire acquisition should help HCLTech enhance its digital capabilities, it should be adding close to around 1.2% to FY22 revenue. It should enhance HCLTech's Mode 1 and Mode 2 presence, and it should be able to absorb the EBIT margin impact. Overall, a fairly good acquisition should enhance the company's capabilities, and with the recent revision in the guidance, HCLTech already hit record highs, and various analysts across Morgan Stanley, CLSA do have a buy rating, and the top pick in the IT sector space remains HCLTech for quite a few analysts.
All right. Thanks, Poonam, for that. In fact, let's also listen in to Swapan Johri of HCLTech, who we caught up with earlier in the morning, to understand the rationale behind this acquisition and the path for the company going ahead. Listen in.
I think the rationale goes a little back in time. I think if you look at HCL overall over the few years, we've transitioned, and I would say not just transitioned, but we've, I think, quite stabilized into our new services mix. And very much in line with that, over the last few years, a couple of years in Australia and New Zealand, we've established our credentials both as a digital transformation services provider, as well as what we now call as a cost transformation services provider. I think the timing couldn't have been better, where we would be looking at how to expand our customer base and be able to take our capabilities, which are quite deep and quite of immense business value to our customers, to a larger set of customers. So that's been the driving rationale. If you look at DWS, they are a company that's spread across a large number of the most important verticals, I would say. I mean, so take the Australia IT services spend. It's in the order of $35 billion.
Okay, well, apart from IT, it's also IPOs that are really, the cynosure of all eyes. We have seen Happiest Minds, great subscription numbers, bumper listing, and now it's Route Mobile as well. That saw a great pop-up on Thursday of its listing on the Lal Street. Remember, the subscription was roughly about 73x. We spoke to the promoter and MD Rajdeep Kumar Gupta and promoter and non-executive director Sandeep Kumar Gupta about the listing, the future plans. Listen in to an excerpt of the conversation.
I think one of the key areas for Route Mobile in going forward is to focus more on the margin and the GOP, and I think that's the one key area where we are looking out to acquire a company in SaaS, which is definitely into a virtual contact center and a video. So we don't have a video API capability within our platform right now, and with this acquisition is a complete SaaS-based company, and where the margins are gross margins are almost in the range of 90%. So with this acquisition, I think our margin is going to be more in the range of 28 to 30% in coming months. So we do see a traction right now, which is growing. And I think this quarter also looks the same traction, and it will definitely grow. So as a company, we have always grown in the range of 20 to 25% year on year from last 16 years, probably. I think I can just, it's a proud moment for us to share that from year one till last year, I think we were always profitable company. And with the current growth rate, which we believe right now, I think we will growing at the range of between 20 to 25% year on year.
Well, 2 done, but 3 more to go for this week. All eyes are now on CAMS, Chemcon Specialty and Angel Broking. In fact, CAMS and Chemcon's IPOs are already open for subscription till Wednesday, that's day after tomorrow, while Angel Broking will open for subscription tomorrow. Now, your channel caught up with the management of CAMS and Chemcon to understand what their company is about, the future prospects, as well as the growth outlook. Listen in.
Sure. So think of us as a 30-year-old company with the founder having been at the helm for the first about 10 years, and then institutional and private equity investors having come in the last about 20-odd years, starting the year 2000. So that's been the character of the company in terms of shareholding, and it is the aspiration of any company to ultimately kind of expose itself and engage with the public markets. So we're doing the same thing. We've had 2 rounds of private equity, one in 2007, and that investor made the exit later, and the latest one in 2018. So we've been with private markets for a length of time. And our aspiration, like any other company, was to engage with the public markets, which is what this step represents. In terms of specifics, the issue size is about 37% plus. So think of it as about 37.5%, about 1.8 crore plus shares being an offer. It's a completely secondary offer. There is no primary component to this. And essentially one large shareholder, which is the NSE Investments. NSE has been an investor in the company since 2013. There is now specific guidance that they should kind of wind down the shareholding. But that was not the primary cause how the IPO came about. The IPO came about, like I said, was through our aspiration of engaging with the public markets. This IPO, therefore, is a complete offer for sale, largely representing the NSE shareholding.
Madam, I'm been restricted by the DRHP or the RHP. I won't be able to give you the projections or the prospects of the possibilities of where will be able to reach. The projected figures cannot be provided. I'm sorry for that, but well, if you see the performance of the company of the past, if we move even if we move within the same graph, the moment, it sounds to be a good positions in the coming time. I would just like to update you. We have received permissions for various new molecules from Government of India and the Pollution Control Board. We have got the permissions for more than 44 products. We have added a new land that is expanded our boundaries and made available more than double the land available to us. So these are the areas which will be available to us for futuristic walking. And the investor can take a call on the basis of that, what can be the future.
Well, let's shift our gaze then to some global stocks and news. European banks are taking a tumble. In fact, some are down as much as 4% in trade. This after the ICIJ, or the International Consortium of Investigative Journalists, alleged that some banks moved large sums of allegedly illicit funds over nearly 2 decades, this despite red flags about the origins of the money. In fact, this media report is naming banks like an HSBC and a Standard Chartered as well in this investigative report. HSBC's shares have tumbled to a 25-year low. Furthermore, on China expansion risks, Standard Chartered is at the lowest level since the 25th of May, and this report has cited documents submitted by banks to the US government. But both companies, Standard Chartered and HSBC, have at this point of time, Standard Chartered at least has said that there will be there will be a screening that will be built for money laundering, and HSBC has said that they do not comment on suspicious activity reporting. For now, we will take a very short break right here on the show. Don't go anywhere. Welcome back. You're watching the newsroom on ET Now. It's time for the 2020 Emmy Awards, and the big winners of the night included Schitt's Creek, Watchmen and Succession. In fact, Schitt's Creek even set a record for the most wins for a comedy series in a single season, winning 7 Emmys in a row. Succession and Watchmen, both from HBO, won 4 awards each. And Zendaya also became the youngest to win for Best Actress in a Drama Series for HBO's Euphoria. Regina King wins her 4th Emmy for Watchmen. Mark Ruffalo wins 2nd Emmy for HBO's I Know This Much Is True. The most socially distant ceremony was hosted by Jimmy Kimmel, where nominees and winners were filmed at their home. Okay, well, on that note, we'll wrap it up on this episode of the Newsroom. Stay tuned for closing trades.